What's good, y'all? It's your boy Rick Got Options, and thank you for joining RGO on another Sunday Stocks episode. And like I always say, whether the market is up or down, we see green. And right now, we saw a lot of green on Friday, even though the market was big red. And the reason why the market was big red, it was because of this thing right here called the VIX, Volatility S&P 500 Index. You could just use this as the inverse of SPY, right? Because when the VIX is up, SPY is down. When the VIX is down, SPY is up. And right now, the VIX is bouncing up off the 200-day moving average, crossed the 50-day moving average with the 9 EMA and the 20 EMA curving to the upside. The only thing that SPY has left, only hope that SPY has left, is the VIX rejecting this 22-25 area. It happened a couple of times, but if the VIX breaks out, then we're going to get a super duper crash in the market. It's going to be real crazy because it is bad news right now, especially with all the tariff talks and all that. But when you're looking at the moving averages, the 200-day moving average should be your holy grail other than the Fibonacci retracement levels, because once you bounce off of this area right here, you usually get a significant move to the upside. As you can see, every time we get our breakthrough right here, it went crazy. The breakdowns were minimal, but the breakthroughs were wild. Now, if we get a breakdown into here, then we're back on the bull train. As of right now, the market is risk off. It is not risk on. Any call swing that you had for over the weekend most likely is going to get burned the way the market is moving right now, especially after hours. So, looking at SPY, SPY has to hold 552. If it does not hold 552, then it's going to be dangerous. If we're looking at SPY right now, we're charting it up the proper way. And look at this. Matter of fact, before we even look to the downside, right? We broke out a little bit. The bulls try to gain some control. If you look at the last video, we talked about the bulls trying to gain control, but it was a bubble that they were blowing up, and it was subjected to pop. I didn't think it was going to be this quick. It could be popping right now, or this could be another little pullback before the bulls try to take charge again. But we got through the 20-day moving average. It wasn't that strong, and look, shooting star doji right here, evening star doji, my bad, right here, broke down. It's a bearish reversal. Not only did we break down through the 200-day moving average, the 20 EMA, the 9 EMA, and now we're getting through the 78% retracement level, and down here, 66618 range. If we break through here and get to the 50% retracement level, under 495, we are in a technical bear market. We're in a technical bear market, and we're going to just cover all this ground down here. And that will not be good for nobody. So, if you want to make a lot of money, get in the market while it's crashing. Yes, people don't understand that you can buy puts and you will make a load of bread. That's why I say whether the market is up or down, we see green. You can play the put side, you can play the downside and be fine. So don't just think you have to get calls all the time. Yes, you may get calls and be on the wrong side. We're trying to get a dead cat bounce right now. A dead cat bounce is something like this. When you're down here and then you just jump up and then come back down. That's a dead cat bounce. All right, trying to give you a little relief rally. That could possibly happen. As of right now, I don't see that in the future. What you want to do is play it safe. Sit on cash, play level to level, and be on the lookout for a significant move. Right now, this downside move is a significant move, right? So puts are to be played, especially after you break under 552. Oh, yeah, 535 is on the table. Looking at triple Qs, it's literally the same exact thing. The rejection of the 20-day moving average, under the 20 EMA, under the 9 EMA, under the 78% retracement level. And we're sitting at here at a pseudo bottom, right? Bang. Nice support. We could put a horizontal line right here. Nice support, but the bottom will not be in unless this support holds at 468. If not, then it's going to be bad, and we're going to drop to 442. So Monday is looking type crazy. Apple, same exact thing. That's what we're looking at. Apple under 210. It's falling off the face of the earth. It's going to 200. From 200, 183. So back to the VIX. This is so powerful. What you want to do is, before you day trade, before you 0DT trade, take a look at the VIX. Understand what's going on. Understand how powerful this thing is when it gets to move into the upside. Understand how it just, I wouldn't say manipulates the market, but it calls the shots for the overall market, just like S&P 500 calls the shots for the overall market. Don't be scared to sit on cash, okay? Don't just hop in a play because you think it's going to reverse or anything like that. Really do your own research. understand your charts, understand your levels. You know what I'm saying? But make sure that you reach out to me. If you have any questions, subscribe to the Discord. Hit me up on Instagram. Drop a like and leave a comment in here on the YouTube channel. We have the free Zoom call tonight. Just check the link in the bio. Free Zoom call tonight at 9 p.m. Just make sure that when you're charting, when you're doing these things, you're confused, you're really just waiting before you throw your money in there. Paper trade, that's the most important thing. Paper trade, please. Because if you're not paper trading, you're not going to know and understand risk management, right? And that's what we're going to talk about next week. Risk management, how to be risk on, how to be risk off, get some long terms, play it safe. Because these things right here, these indicators, they're going to help you out. We're going to be dropping more videos on the daily showing you how to utilize these indicators or use them as support and resistance levels. But until then, I'm out. And like I always say, whether the market is up or down, we see green.